everybody. Cassidy Cotton from the Cotton Group at Simply Vegas, and we are here with your February 2020 monthly market report, and we're going to just jump right into the news. Okay, so I want to start with this first slide, and this is the updated projection from most economists regarding a recession, and the timetable has been pushed back, guys. In 2018, 67% of economists thought, because we've had such a long bull run in our economic recovery, most thought that by the end of 2020, 2/3 that we would have had a recession by now, which is a slowdown in GDP for 2 successive quarters. Last year, about 1/3. Now, only about 14% of economists actually believe that we're going to have a recession by the end of this year. So those timetables have been pushed back due to the overall strength of our economy. And one of the leading reasons why is the strength of the real estate market. Showing Times latest report shows yet another increase in buyer traffic overall, right? Showing numbers confirm that year over year, buyer activity has increased substantially. And NAR is reporting a significant year over year jump in pending sales, which confirms that trend. And that's from Showing Time, okay? Now, existing home sales have increased year over year, and this is in every region of the country, you see, ladies and gentlemen. So nationally, we've had an average of 10.8%, but in the South, in the West, Midwest, and Northeast, we have seen those increases in overall home sales. And it's interesting, so we started to see that decline. In 2018, August, September, October, November. Well, we've seen a jump in recent years, and I'm saying from on a local level, we have seen an increase. If you look from this month, January 2020 to January 2019, I think it's like a 25% increase in overall activity. December, I think, was a 21% increase. So huge increase in numbers. And I think what that was, and we're going to start to talk about various trends, various differences that we see between the national market and the local market here in just a couple of slides. But I think that had a lot to do with some artificial stimulation. But nevertheless, Lawrence Yun, the chief economist at the National Association, he said, we saw in 2019 come to a close with an economy churning out of 2.3 million jobs, mortgage rates below 4%, and housing starts ramp up to 1.6 million on an annual basis. If these factors are sustained in 2020, we will see yet a notable pickup in home sales in 2020. So very strong report there. And when you look at buyer traffic, it's increased all over the board. The dark blue is strong, the lighter blue is stable, and the gray is weak. So you only see that Connecticut, Louisiana, Illinois, and obviously ourselves are weak in terms of buyer traffic. Okay, and I have a suspicion about that. Now, but before I jump on that, I want to share with you what we're seeing in terms of seller traffic. Okay, and seller traffic, okay, has been somewhat stable in these blue states, but it's weak the rest of the country. So what the rest of the country is seeing is a real big crunch. And I think that we're going to follow that, where months of inventory is going down to record levels. So, and we'll see that later, you have about 3.0 months of supply, okay? But that varies a little bit from us. We're at 2.1 months of supply, but we've seen it at a tighter market. So to us, even though we're still below that national average, okay, for us, we're still used to it. I'm going to touch base on all those numbers here in just a second. George Ratillo, who's a senior economist at Realtor.com, he said the market is struggling with large housing undersupply. The number of homes for sale are poised to reach historic low levels. And I think that we're going to start to see that here. And what I'm going to say is this. In terms of total homes for sale, right now in the Valley, we have 6,227 single-family residences, condominiums, and townhouses, like as of 30 minutes ago. Okay, 1.4 billion nationally. Okay, and in terms of month supply, they have 3 months of supply. Now that's really, really low from a national level. It's actually at historic lows, right? For us, we're at 2.1%. Okay, now our 2.1 months of supply. Now that's much lower than we've seen. Okay, since when the hardest hit fund dried up, and I think that was July or August of 2018, we saw a immediate drop off in terms of overall purchases being made, and then we started to begin to see an increase in inventory. So this is the lowest number that we've seen since that time, and that's that artificial stimulation that I talked about in our economy that had really boosted things up. However, now what we're starting to see is that to come out and normalize, and we're falling somewhat behind a national trend. But I think some of the issues that we're having here locally is that Las Vegas, I think specifically, suffers with a lot of PTSD from the last recession. Okay, and it's really interesting where people are less likely to pull the trigger, and they also have false beliefs about the future, meaning that they're a little bit concerned about, okay, well, should I make this move now because it might not be the right time, because I think that the market's going to fall 50% again because I saw it happen 10 years ago. And guys, I'm here to tell you again, none of the economic data in any way suggests that that will happen. None, zero. So if you think that, hey man, you know what, things are high price now, I'm gonna wait and get it at half price, it's not happening, guys. And when something extraordinary happens, that's not in the cards, guys. Now, inventory always decreases sharply, and this is Bill McBride from Calculated Risk. He says inventory always decreases sharply in December as people take their homes off the market during the holidays. However, based upon the data collected, this was the lowest level of the inventory in the last 3 decades. And this is over the previous was 1.43 million. That was back in 1993. So this is going to be the national look at months of inventory, right? And this is right after the crash and everything, when obviously there were tons and tons of homes for sale back in 2011. And you've seen that it's slowly started to come down to this, to like I said, this record number that we haven't seen in a long time. Now, Las Vegas differs somewhat. Even though we were the heart of the boom and we were right at the center of the crash, and we were right at the center of it, what we saw here is this is the height. Like I said, pretty much the same there. But what we've seen are significant peaks and valleys, guys. And I got to say, our lowest point was when we had 1 month of inventory, and this is back in 2013, okay? But even back here, which is March of 2018, we saw like 1.2 months worth of supply in total. And I think that's the same month that Giovanna Pagoli and I did a video, and we talked about the dire situation of our inventory. So it's still weird at 2.1 months of inventory, which is less than the national average, and they're concerned about it. We're still all right because obviously buyers and sellers, as well as real estate professionals, have all dealt in this before. But nevertheless, what it speaks to is a need for more inventory on the market. And those inventory declines are going across price range, guys. So obviously, we're seeing more inventory declines with the lower priced homes, okay? And those mid-range homes, we're also seeing a significant decline. But we're not seeing as much of a decline in higher priced homes. And obviously, that's a completely different buyer pool and seller pool, all right? So we're not seeing huge inventory declines there as much as in other areas, just because the buyer and seller pool are significantly different. Now, single family home construction, and you say, well, Cass, okay, you're talking about existing sales. What about new construction? And it is true, we've had a lot of great new construction, but I just want to put this in perspective, you guys. When we look at it in terms of per million of population, in terms of construction starts, if you look at where we're at now, we are still at least half of what we've seen in previous decades, guys, okay? So I just want us to kind of be aware of that and put that in historical context, right? Now, the sales pace for newly built single-family homes ended 2019 with a gain of 10%, increasing to a total of 681,000 units. And this marks 2019 the best year for new home sales since the Great Recession. So new home sales are going well, and it is in a positive direction, but let's just keep that in overall perspective. Now, one of the best, this is from Skylar Olson, who's the chief of economic research over at Zillow, and I thought this was really kind of an interesting explanation of what's happened. A year ago, a combination of government shutdown, stock market slump, and mortgage rate spike caused a long-term anticipated inventory rise, right? And we saw that happen, and that was and that supposed boom turned out to be short-lived. A mirage as buyers came back into the market and more than erased the inventory gains. So when we did see those rises in inventories, we've actually seen that reverse. Now, as a natural reaction, the recent slowdown in home values looks like it's set to reverse. So we, again, are anticipating increase in prices. And we look over year, okay, from a regional standpoint, each region has seen a gain, okay, when we look year over year. And this is from the FHFA report. And then when we look at that same report, okay, on a per state basis, these have been the gains. And guys, I want to remind you again, your average home price appreciation is about 3.5, 3.6% per year. So most states outpacing that, right? And then let's talk a little about what we see. This is from CoreLogic. Same thing, a little bit different numbers, okay, because they use a little bit different set to evaluate. But still, again, no states are losing value. Everyone has gained in value. Okay, well, that's great, Cass. You've shared the past with us. You've shared that with us every single month. What about the future? I share that all the time, too. So these are the same states, the same CoreLogic report, okay, in terms of what they anticipate for the next year. And what we're starting to see is that they're very bullish, okay, going into 2020 in terms of their forecasted change in price. Now, we don't have to depend on just FHFA and CoreLogic. I mean, obviously, I like to update this slide, but the Home Price Expectation Survey, Mortgage Bankers Association, Zelman and Associates, Fannie Mae, National Association of Realtors, and Freddie Mac all anticipate housing increases throughout the year. So we still feel like that appreciation is going to occur, and really none of the experts are saying depreciation. So like I said, for those folks here in town that say, hey man, you know, I'm going to wait for it to fall and I'm going to wait for prices to cut in half again. No one's anticipating that that's going to happen anytime soon. And that's the reality. And really what we're talking about is affordability, guys. And I love Dave Ramsey, Financial Peace, awesome. And he said in one of his blogs here, he says, well, if you're planning on buying a house, home prices might look intimidating. But remember, just because you saw house prices that other people in the nation are buying, that doesn't mean that you should look for a house price in that range. Instead, focus on your own budget, okay? And don't worry about house pricing trends. And he also stated in that same blog, a good real estate agent can help you find a home that you love that's within your budget, okay? And that's just sound advice. There are more things that go into affordability than just home price. You can also look at mortgage insurance requirements, which can actually be bought up front in a lot of loan programs. Interest rates, which are at significant lows. We're at around 3.8%. Down payment size, your overall credit score, and your debt to income ratios are all going to affect your monthly payment and your home affordability, okay? Now, we expect mortgage rates to remain low over the next 2 years, averaging about 3.8%. And, you know, it's funny, you also get those guys say, oh, I'm going to wait for it to go lower. Well, here's the thing. If it does go lower, home prices are still going to appreciate more. So you might want to look at possibly picking up a home now. And if they do go lower, then refinance then if it makes sense for you. But when we look at interest rates as to where they're at, when we look at the 70s, the average rate over that decade was 8.86%. Over the 80s, 12.7%. 1990s, 8.1. We are still at historic lows, guys. So we have to kind of keep that in mind. And it's really interesting. You're saying, well, if everything's so great, what is it? Again, I think this is PTSD, man, from the housing crash that we experienced a decade ago, you guys. Because look at here. From 1985 all the way through 08, people are staying in their houses 5 or 6 years. But once 2009 comes and beyond, now people are staying in their houses much longer. They're not as apt to pull the trigger, and that's nationwide. You know, so people are a little bit concerned about selling their house, and I completely understand it. So we go back, to Dave Ramsey. Sorry, we skipped a slide there. Can't skip Dave, right? Oh, Dave says when it comes to home prices for sellers, The main question is, how much money can I make on my home sale? And I got to remind you, in 2019, sellers realized a home price gain of approximately $65,000 in a typical sale. This marked the highest level in the U.S. in over 13 years. So, guys, there's a lot of equity in your house, and it might be a great time to upgrade, or if you're a little bit older, it might be a great time to downsize, because understand, if you're downsizing, likely you're spending less money on a house, which really brings affordability into play. Now, is it a good time to sell your home? The NAR home survey, 75, so 3 out of 4 people said yes. And in the Fannie Mae survey, 2 out of 3 people said yes, okay? And when you look at that across generation, obviously the millennials are slacking. Just kidding, guys. But I still, even the 2/3. But most generations feel like right now is a good time to sell. And it's just about taking that step of faith to meet those real estate goals, you guys. All right. And I bring this generational slide up because, with a lot of seniors, they might be a little bit concerned, without a full-time job and that sort of thing, and that much, and a little bit older, they may be concerned about their ability to qualify for a good mortgage, which may be holding them back from pulling the trigger. But understand, if you've had huge gains and you're downsizing, okay, you might have much more affordability than you're aware of, because your mortgage lenders are going to take into account pensions, Social Security, dividends, interest, all this various income sources that you have available to you. And it's worth talking to a really good, knowledgeable lender to help give you that advice. And older Americans can still get a 30-year mortgage. Let's keep that in mind. You may feel like, hey, if I'm a little older, they won't lend to me for 30 years. Yeah, they will. Yeah, they will. That's not a thing. So nevertheless, guys, no matter what your goals are, it might be a good time to really talk about it, because we're expected to see solid gains over the future. Rates are low and housing is affordable. And if you're waiting for the past to return, that's not how time works, guys. So again, it's Cassidy Cotton, the Cotton Group, Simply Vegas, signing off. Resources stuff. I know you can't see these. They're not even clicking over. We're just getting crazy. Oh, there they go. Oh, no, it all ended. Anyway, issues with, no, there they are. These are the resource slides. If you want them, I'll forward them to you. You can see where I get my research. But thanks for signing on, guys. We'll see you later.